Marty and Belen.
All right, Marty and Belen. You already have two mics?
You got
Oh,
two.
I didn't give them
Yep. All right. Well, thank you for agreeing to present. Why don't you tell us a little bit about yourself?
I'm Marty, obviously. This is my wife, Belen. We've been members since August of 2019. And, you know, as some people said, you know, it takes you a little while to pull the trigger and get moving. We bought our first house in, gosh, I want to say it was December of 2019. And then we were slow for a little while. And
You was slow.
yeah,
So,
she is often telling me, hey.
so do we have the type A and the type B?
Well, I am very, I'm pretty conservative, and so it has taken me a while to, you know, and I can't tell you how many times I've gone out to look at houses, you know, when they've gone through the blasts or through the road shows and things like that. So I'm the hands-on person, so I'm the person that goes out, looks at the houses, and
I'm the money person.
so she tells me, you know, what we can spend.
Like, yeah.
So I'm in IT again. I am full of it. I am in IT services sales, and my wife is a business development manager in the geotechnical services world.
And so prior to 2019, you didn't have any real estate experience?
Personal home stuff,
Yeah.
but none from the investor
No.
perspective. No.
All right.
And I thought this was all, I didn't want to come.
You were very skeptical.
She was very skeptical.
I didn't even want to come to this one.
Were you fearful or skeptical?
I just thought, come on. If it's that good, like you guys were saying, why isn't anybody else doing it?
Right.
That's good. Yeah.
Why isn't everybody else
Yes,
doing it?
why
right?
isn't everybody? And within probably 30 minutes, I said, where do we sign up? Where do we sign up? And he's like, no, we're going to go back home. We're going to talk about it, and we're going to look at the numbers. And so we did, and a
Look
month
at
later,
every little
I'm
last
like,
detail. And
where do we sign up? When do we buy the house? And so then we finally signed up.
yeah, that's awesome. That's awesome. Well, it sounds like you guys are a great team. You can kind of meet in the middle, as long as it's your middle.
Yeah, as long as yeah, exactly. Her middle.
Okay, so tell us why lifestyles. You know,
So, you know, like everybody of my age, I went through the crash in 2008. You said 50%, mine was 40%. I've seen my 401k go up one year, down another year. In fact, this year it's down 11%. I'm in the process of trying to get out of that. You know, all of those different things. I just wanted something, one, that we could control because I felt helpless in a 401k.
yeah, that's what I was going to say. The control is with real estate. There's so much more control.
Right.
So go ahead.
Yeah, so that was really it, right? And I'm at the point now in my career to where I can actually see the light at the end of the tunnel from a retirement perspective. And I, you know, after going through the 2-day and Dell talking about the idea of, you know, you work for 40 years, you retire, and you hope that you die before your money runs out.
Sell your house, you buy a smaller house.
Yeah, you
Don't go on vacation
immediately
anymore.
lower your class of our standard of living so that you can survive your money, or you know, die before your money runs out. And that's not how we wanted to live. We wanted to be able to travel. We both participate in running and triathlon events, and so we like to be able to travel to those events and things like that.
And buy nice bikes. Those are expensive.
Right. I feel that. I like that too. That's awesome. So tell us about this property. This is your first. No, this is your.
This is number 4. So we've actually bought 3 through Lifestyles, and then we applied some of the learnings that we did. And my stepdaughter, her daughter, is up at Texas A&M, and we thought, why should we pay rent for her to live at Texas A&M? So we actually utilized some of our learnings from Lifestyles and bought a condo up there. And actually, her friends pay the mortgage on it, and we have some cash flow on that, and she lives rent-free. So, and in addition to that, we have 3 houses that we've purchased through Lifestyles. This particular house, you know, earlier presenters talked about things being quick. This all happened from December to now, and it's rented, fully renovated, went through hard money process, conventional conversion, and it's now got a rent.
This is a freshly minted property. They did just the refi on Monday. So
Yeah, so we just got through the. We'll tell them we.
oh, that's right.
So this house is in Angleton. built in 1960, about 1,500 square feet, and it was rough, very rough. And
All the houses we bought were rough. Some of them have pooped on the floor.
yeah, I mean, that's one of the things you have to get over when you first start. When you go and look at these houses, this is not the house that you go and look at as, hey, we're going to buy a new house and we're going to move in and it's fantastic and look at the pool and look at those countertops. Oftentimes, you have to get over things. The very first house we looked at, I took her down there and she walked in and nope, we're not. And you have to get over that. You have to.
You had to learn what the smell of money is. And what is the smell of money? What is it?
In your pants.
Cat pee. Cat pee is the smell of money.
If it's an animal urine, then you're ahead of the game, right? So, but
That's even better.
so you have to look past that and look to the end state. This house that we bought, it was basically everything was replaced in this house.
Yeah, it brings a new meaning to passing the smell test.
Yeah, it really does.
Yeah, so your sense of smell gets very attuned. So, so this property, it's your fourth property. You hired the general contractor. It was a standard process.
Yeah, standard process. This particular contractor is not on the Lifestyles vendor list, but it was somebody we had used before. He had done some work for us, walked the property with me. It's somebody I trust because it is in Angleton. We live in Katy. That's a little bit longer distance. It's a little bit tougher to keep an eye on things. And so you have to have some trust in your contractors. You have to build that good team, and you have to believe that they're working for you. So that was very important, because as we peeled back the onion on this house, there was more and more and more that needed to be done.
Yeah, and that's an important point to keep in mind. Everyone's working for you. You're the boss. So keep that in mind as you go through the process. So let's look at the numbers real quick.
Yeah. So and these numbers have changed just a little bit. We bought the house for $88,000. When we went through the hard money process, the ARV was $177,000.
Explain what the ARV
This is
means.
more.
Yes, this is more. ARV is after repair value, and when you go through a hard money process, that's the number that the hard money lender will use as to how much money you're going to get for repairs and rehabilitation. So it cost, as you can see, we bought the house for $88,000, and it cost nearly $57,000 to get it up to a standard to where, as David said, best product, best price. So we went through that whole process. As Doug mentioned, we just converted on Monday, closed that, and we actually got back money at our closing on our conversion, which is first time in my lifetime that I've ever received money back at a closing. But what ended up happening was when we did that conversion, the appraised value actually came in at $202,000. So when all of that was said and done, our loan on our property is $140,000. Its value is $202,000. So that's $62,000 in equity, and the cash out of pocket is actually just over $20,000 now.
Yeah, so let's look at this. Great job, and this is just your fourth deal. So you've got a cash-on-cash return of over 15%, almost a $50,000 profit on the day you closed. So amazing, solid deal. You take that over and over again?
Oh, all day long. Yeah, the equity capture on this, I figured it out right before we came down here, is actually 307%. And with the new numbers and everything, the cash on cash is just under 17%. So it's going to be a fantastic deal for us. The other good thing about this...
You see how excited he is? That's how excited these people get. 300% return. Did you make that type of returns in a 401k and IRA?
I have never made that type of return.
So what is the technical term in the industry when you make over 100% return?
You dance naked in the house, right?
That's pretty good. I thought it was peeing your pants excited, but hey, whatever floats your hit boat.
Well, and this thing gets even better, because one of the things that we didn't know when we first bought this house is it actually sits on 2 lots. So now my next step on this is to go to the city of Angleton.
Just got leased, right?
Yes, just got leased, but my next step is to go to the city of Angleton and see if we can utilize that second lot and put a house on that lot that we've already purchased as part of a deal where it cost us $88,000.
Well, you forgot to preface that with, wait, there's more.
Yeah,
Right.
there's more.
I was gonna say, we might have to come back then and
Right.
present that
Yeah,
one.
that's going to be amazing numbers. And what's also interesting is like the high equity capture and the cash flow. Typically in the deals, you'll see kind of an inverse relationship. The higher the equity capture, the lower the cash flow. They can both occur as high, and that's a unicorn deal. But there is a general relationship so this is a good example of that.
And that was one of the things that we set out to do, or I set out to do, is that I'd like to be around that $400 a month per property for cash flow. This one's going to be a little lower than that. But I also like to make sure that I get equity capture as well. Right. And this one is going to be higher on the equity capture.
And when you work with the mentors, we'll go over what your criteria are and all that, and they'll always get tested. So you'll come across a deal that, like this one, is so good. How do you say no to a $47,000 equity capture just because the cash flow didn't quite meet your criteria? So no matter what criteria you come up with, it's going to get tested, and use us as a sounding board to work through that thought process. So this is your portfolio.
Yep. This is what we have today. The first three are our lifestyles properties. They're all in and around the Houston area. The last one, as I said, is the condo that we bought in College Station for her daughter, and it's $20,000 a year in free money, so to speak, and it's fantastic equity capture. I mean, that's really where the big deal for us is that all of them have gone. Obviously, the last one hasn't been that big of a deal yet because we just bought it, but all of the other ones have increased in value more than 10% per year. In fact, the condo that we bought in College Station, in fact, I thought I overpaid for a while. And it's gone up almost 30% in the 1 year that we've bought it.
Wow. Amazing.
Hear how excited he is again?
Just the facts. Just the facts.
I love it.
Yeah, I mean, it's crazy. You've averaged over a $25,000 equity capture across your portfolio. That's amazing. So how has this changed your life?
So really what it's given us is, for me anyway, and big surprise because I am conservative and things like that, it's given me peace of mind, right? Obviously, the percentages have far outstripped what we've done on the 401k. We have taken the step, and you'll learn about that in the weekend session, about the ability to pull money from your 401k through the QDRO process and things like that, so that we can now begin investing more and more. And it's, because of the fact that I was born in Missouri, the show me state, it had to be proven to me to a certain extent, and it has been, by far.
Well, you'd mentioned control before, so your sense of control has probably increased tenfold?
Significantly.
Awesome. So what's next? Your short-term, long-term goals?
Short-term, long-term, and actually these are kind of, the short and long-term are concurrent to a certain extent. I'd like to get 3 to 4 more single family this year. And I really need to get off my butt and get into the multifamily, the passive side of the house.
He's going to kick your ass.
She does on a very regular basis.
Good.
You just got the eye rolls. So.
Yeah. So no, it's really what it is now is this works, and you just have to take the step of doing it.
Get in action. So that's why I acknowledge the people that just signed up. I mean, you took the action, you overcame that fear, you put that fear in the parking lot, and we're going to be working with you very soon. So thank you so much. I guess we have time for some questions.
Yeah, let's ask you. Anybody in the room have questions? Well, there's one right there. Hold on. Another cameraman. You were a cameraman too, weren't you? Or are you still a cameraman? Not that I'm pointing out. They can't see who you are. Don't worry. Oh, wait, he has one.
You said you're pulling money from your 401k through Quadro. How much do you pull out per deal, or did you put out all in one chunk? I mean, because it's income.
Being conservative the first time, we pulled out a portion of it the first time. Because of, if you hadn't noticed, we have a slight age difference, a couple of years. So I'm much closer to the 59 and a half. So what we did when we pulled her 401k into my world is I'm rolling it into a SDI IRA. That way I can invest in multifamily from that IRA, and I'll be able to access the funds here in a few years.
And I'll teach you
And
about
I was
that
gonna
this
say, they
weekend.
teach you all of that,
But-
because I don't understand any of that, but they teach you that on the weekend.
But with hers, we pulled some money out, paid the tax bill, did not pay the penalty, and we've
teach you how to do that,
utilized
too.
that to,
And you did a quadro?
yes, we did it.
Don't
we
worry,
did it both.
I know that's Greek to you all, but I just want to tell you really quick in simple English so everybody understands what that means. How many people heard you can only pull out $50,000 or 50%, whichever is less, out of your 401k? What if you have $500,000 in your 401k and your boss at UPS says, no, you can only pull out 50K? What if you get it all 500K? Who would want to do that? Come to my weekend. I'm going to show you how you can move your money from one spouse to the other spouse and vice versa. And not only that, not pay the 10% penalty. God bless the IRS. Who's with me?
Yeah.
I'll teach you that this weekend, though.
Yeah,
I
and
can't
we
explain that all now.
and we did it both ways, right? So hers went to me, mine went to hers.
See, so that was politically correct. They're not identifying. They did it both ways.
And one thing, I think after you buy a few houses, you think you know it, and you're like, well, I'm going to start looking at, these things over here, and maybe I won't do it through lifestyle. Don't do it. Okay, we've seen people that have done that and have lost money, and one of the things I told him when he was like, well, what if I look over here? I said, we paid there, we're going to stay there. If you have a question, you ask them.
See, she has wisdom.
And you're going to hear David tell you this.
Well,
probably
let's
this
see if you
weekend.
remember that. What's rule number 1?
Never lose money.
There you go. So she's right again.
Yeah, she's right again. And no, one of the things you're going to hear is somewhere he's going to tell you, write this down.
Write
You
it
know,
down.
I didn't listen to what David told me to do. And you will always lose on that. Eventually, you will always lose using that advice.
Yeah, and what that refers to, if you're new, just so you understand, is I am telling you this meticulous map that Dell taught me, and he's been teaching this for 30 years. And he says if you do it exactly this way, it'll mitigate your risk so much that you won't lose money. Who likes that idea?
And it
But
works.
if you don't do it the way we teach you, that's where you add risk.
And I was very much of that idea of work your whole life, put money away, retire, all of those things. So this was absolutely a paradigm shift for me, and it was a hard one. But I am 100% in the boat now.
Yeah.
You're on the reservation.
Yep.
All right, who would you like to shout out? And I put the mentors here too, just in case
Yep.
you get too big for your
forget.
britches.
Yeah.
We're here for
No,
you.
and so one of the things that I've used the mentors for a lot is I'll just fire off questions, email questions. Hey, what do I do about this? Have you seen this before? And it always comes back with, yes, I have seen that, and here's what you should probably do, or here's what you should consider. Because at the end of the day, this is your business. So you can make the decision to not listen to what David said. You have the right to do that. There are consequences. Actions have consequences. But I've used the mentors for that. I have leaned very heavily on Jen McCormick. All 3 of my houses.
Jen,
today?
can you stand up so
There she
everyone
is.
can see you?
There she is. Great realtor right there.
all
We're
3
best
of
friends.
all 3 of our houses that we've purchased through Lifestyles have been through Jen, and she could probably tell you horror
She
stories
made you a
about.
boatload of money.
She did.
She gets a nice Christmas card
know, right?
with a
Yeah.
smiley face.
And things that normally you wouldn't ask your realtor, I've asked Jen before, hey, what should I do? Even on houses where I'm looking at a particular house and it isn't through her, she's given me advice. So I can't thank her enough. She has more than helped us along this path. The different vendors, I always use Amerispec, always have an inspector done. I have a background in construction, so I know a lot of these things. I know how to frame, I know how to do drywall, the roof, all that stuff, and I still use them because you will miss something. I guarantee you'll miss something. This particular house, we use Searchers Capital. We have used AMP in the past, and our AMP, and they've done fantastic for us. Foundation issues here in the Houston area, don't be afraid of them. Most houses that are older than 15, 20 years probably have some foundation issues. I've used Freddie over at Guatex quite a bit. We have chosen to put our properties with a property management company only because we both work full-time and I also coach part-time, so the hours, for the most part, it just works out better for us.
And we teach you either way. If you want to use a property management company, that's fine. That works for you. Just know that there's a cost associated with it. If the returns still meet your criteria, then go for it. But we do teach you how to do it yourself. So is there any more questions here in the audience, or maybe one online?
Someone asked, I just got approved for my first loan. Any on advice while I'm looking for my first property?
Look at a lot of properties. Be active.
And be quick, because
Yes.
they go fast.
Yeah, and especially in the pandemic and with the real estate market becoming tight, you don't have time, as it was mentioned, you don't have time to go home and, hey, let's think about this. Oftentimes it's 15 minutes, or you're standing in a group of people and, okay, who's interested? We're going to draw cards, right? If you're not interested, you're driving home.
But let's not. So let's be clear. You're not going in blind, right? You're doing a lot of homework before you even get to the property. So keep that in mind. You're leaning on your mentorship. You're leaning on your education. You're not going in blind, but you do need to see that property before you pull the trigger.
And there are a lot of online tools that will help you with that research part. I use Quest all the time. There are a number of different things that you can look at that will tell you information about the neighborhoods, what the schools are like, all of those things. But you've got to be active, and you've got to be decisive, right? Do your homework, build your good team, but be decisive and
be educated.
be
Spend
educated.
16 hours, learn how to do it right. You're not
Yes.
there on your own. It's not the Wild West. So.
Yep.
Exactly.
Awesome.
So is that the last question? No more questions?
There's one over here.
Oh, right there.
Oh, yeah, I'll do that one. I will run all the way over there. Okay, I'll waddle. I don't run.
I have one question about the lending money. Like when you get the hard money lender money, you have the closing costs, the same as the bank do, but we get the higher interest rate. But then it goes back to the conventional loan. At that time, we also have the closing cost, right?
Correct.
And
Yes.
They charge us about 2%.
So like on this particular house, on our conventional loan, when we went to that closing, we got a check back. Because of the equity capture in the particular property, we got a check back. And my closing costs for the hard money loan on this one were $10,500. So ultimately, closing costs between the hard money and the conventional loan on this one was about $8,900.
And that can be rolled into the loan. So what it comes down to in the end is, who cares what it costs for closing costs? It's no different than putting on a roof. You have to take your emotions out of it. You have to take your emotions out of whatever interest rate. None of that matters. What you should be thinking as an investor is, what's in it for me? What is the bottom line? What is my rate of return? What am I going to make a year after everything? That's what they were showing. How much is my total money out of pocket after everything was 20-some thousand and I made like 50 grand? Would that be okay for you? So it doesn't matter if the closing costs are 5 grand, 10 grand, or 20 grand. It's irrelevant. People get caught up in minutia of things that they're fearful of because they have unknown expectations. Does that make sense? So don't worry about what interest rates are. But hard money is high interest rate, but you're only in it for a month or two. Even if it was 12%, let's say. If you're only in it for a month, how many months are in a year? 12. You're paying 1% interest because you're only in it for 1 month. Does that make sense? Sometimes I have to take people's emotions out of it, the way they're thinking emotionally, like, I'd never pay 12% interest, is saying, what's the bottom line? What's in it for me? Is this going to be better for my family? Does that help you a little bit? Because I know that's a fear of everybody in this room. You hear a high interest rate like that or a high closing cost, you're like, that's expensive. Who cares? What am I going to get in the end? Does that make sense logically? Okay, because when you look at a mutual fund, and there's 400 different companies in there, do you go out there and visit every single one of them? Did you look at their whole portfolios? Or did you just invest money and hope you made a great rate of return? You said, what did you make me per year? Well, negative 4%. Sorry, you invest in mutual funds, they suck. But that's your choice.
Yeah, and we had one payment on our hard money loan.
Whoops.
In the entire time. The rehab took about 6 weeks. We had one payment, $1,000. And you know what? You can see the numbers don't lie, right? So as David was saying, the what's in it for me or the whiff 'em, that's really where you have to see the forest for the trees. Don't get caught in the trees.
Yeah, well said. All right, I think
Awesome.
that's it. So thank you
Well,
so much.
Thank you so much. Appreciate you guys all giving back. I really appreciate it.